Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, January 4th, 2018. I wanted to wish everybody a happy and prosperous new year. Hopefully, I can help you with the second part of that, or, well, maybe both of those. Yeah, they tend to go hand in hand a lot of times. I wanted to take a look at just a few things that stand out right now. I'll try to put together um, over the next week or so as we kick off the new year some of the sectors and some of the trading opportunities that look good for 2018, at least here as we head into the first half of the year. I'll get to maybe a touch on the broad markets here real quick. There's not a lot in the charts right now that stand out. That's why I haven't posted any coverage on the broad markets in the last week or so. But I will touch on that. And again, just go over what I'm watching right now and what I'm trading. Start out with the marijuana stocks. That's the big news today. They're down big. We've had a tremendous rally. And for those of you that have been in the trading room, we've been talking about this a lot lately. I even mentioned yesterday, there was a lot in the charts, part gut feel, but also a lot to do with the technicals. I stated that was it. I had, a lot of these positions over the, on and off over the years, but I've had core holdings. These are my cannabis stocks. This is my watch list, my ever-growing watch list. I have currently 55 stocks within there. And until this new ETF came out, I've always, and I'll still continue to do so. I use a what I call shotgun approach. You never know which ones are going to run, how far they're going to run. So I make my own ETF, if you will, my own mutual fund by diversifying among sprinkling money out of many of those stocks. A dozen or more usually at any given time when I'm engaging the sector, which is there's times, and for the most part, a lot of those were kind of buy and hold, put away because the sector, has a lot of growth potential and still does. But as of now, to try to make this, wrap this up, we've had a tremendous run up. The cannabis stocks were already in rally mode and doing very well up until this ETF. Or even before this ETF, I should say, before it was launched. I think it was December 27th, was it? Came out, yeah, Tuesday or the 26th, Tuesday, December 26th. And again, I talked about this. There was a front page post, but if you haven't caught up on the site lately, MJX was the first to market in the U.S. It's the U.S. traded, exchange traded ETF, exchange traded fund. And so now U.S. investors have a proxy where they can invest into one ETF, which holds a basket of cannabis stocks. Very popular. I'm surprised it took so long to get one to market. But it came out, and as I said, it came out. A lot of those stocks were already in rally mode, and then they just exploded over the last couple weeks because there was a lot of forced buying when you get, and this ETF did have a lot of inflows. A lot of money was going into this ETF. They in turn have to go and spread that money out and invest it into a basket of marijuana stocks. So that hit the turbo boosters for those marijuana stocks that were already in rally mode, already getting a little bit stretched or approaching a lot of key resistance levels, chart pattern measurements. And either way, so yesterday I had closed out all but just two individuals that I was going to hold, and even took a starter short right at the end of the day in the ETF MJX, which still you can still short at least through Interactive Brokers. They had shares as of this morning, so I added to that. And the reason is this is a momentum trade. When you can short an ETF, you have a lot less risk than shorting any one of these individual stocks. These are low price stocks. A lot of these are penny stocks. I'm referring to the cannabis stocks on my watch list and the stocks that they hold there. Many of these stocks almost all of these stocks are not traded on any major exchange. Now, keep in mind the pure play cannabis stocks, meaning the growers, retailers, those are Canadian companies because Canadian cannabis is still illegal at the federal level. And that was the big news today when Jeff Sessions, the Attorney General, stated he was going to end a policy that allowed legalized marijuana to prosper. So you had the states legalizing it while it was still legal at the federal level. Very unusual circumstance, and for the most part, the federal government has looked the other way. So that popped this little bubble that was going on now, or at least a momentum. And I think, as I stated in the trading room, I think there's going to be more downside. Sure, there are going to be dip buyers will step in here, but when you have a momentum fueled trade, and especially one that's very extended, um, And once the momentum stops, you tend to see a rush for the exits, and you certainly had that this morning. A lot of these stocks were down. I mean, you can see here it gains 40%, 30, 20, high 20s, quite a bit. Majority of these stocks were down 10% or more today. Um, all right, enough on that. And the point I was trying to make again is that there's probably more downside to come. I think it's fairly safe to say, at least for the time being, most of those pot stocks have probably seen their highs. Again, I still like this sector longer term. It is a growth industry in its infancy, so there's down the road, there's going to be a lot of profits to be made here. The trend still remains, despite the Attorney General's comments today, or even that came out yesterday. There's still a clear trend towards legalization of marijuana at both state and federal levels and in various countries, not just the U.S. So that being said, uh, I'll be looking to recycle back into these positions at the right time. I just think it's going to be a little while. And even if they come in and buy this dip up, and take these stocks back to, take out the recent highs, which I don't think will happen. Um, I'm not going to chase them here. I'm not going to go back in at this point in time. I'm going to wait till they come back in, and when the time looks right, we'll re-engage that sector, start scaling back in, adding back exposure on the long side. If you didn't catch it, just to talk about this ETF for a second there, remember I put up some levels on this, support levels, but these levels are irrelevant. In fact, anything previous to Tuesday the 26th on this chart is completely irrelevant, because this ETF used to hold Latin American high yielding real estate in Latin America. So it was probably cheaper for them to just retask the investment objectives of this ETF. In other words, purge out, close out those holdings, buy marijuana stocks, and come out with a new investment objective than to bring a new ETF to market. That's my guess. I've never even heard of this company. Shocked it took so long for an ETF, a U.S. exchange traded ETF, to get out there listed, but here it is. And so again, it gave a little turbo boost, if you will, to a rally that was already in play on the cannabis stocks, bringing those levels to extreme valuations. And now that momentum trade has popped. So let's just wait for it to come back in. And of course, we can chart going forward. If you zoom down to the intraday charts, we can take a look at this ETF. We can look at some levels, because this, you can see here, we can just add lines. You look for these reactions here. You can see a reaction high, prices consolidated there, boom, breakout, big impulsive move. So you can trade it off these levels. And there's still shares available to short through interactive brokers. Let me look at another monitor. Yeah, they still have it green barred, meaning they have. I can tell you right now. I have to hover over here. Oh, it's not giving me the total number. Well, 5,000 shares as of now is what Interactive Brokers is reading. So again, a lot of traders are long side only. I get that. So if you don't care to short, but if you do, if you're looking for a bounce back target, you can probably right around here is where I expect the next batch of investors or momentum traders that were trapped and caught off guard by today's move. You'll probably see them most likely step in anywhere from break even, where we closed yesterday. That's where the CTF, you can see that dotted line will go flat right around here. But my guess is that's probably about the upper end of today's bounce right here, about 36.82, come back down. And I think before all is said and done, there's more downside. And remember, we could even take out the lows on Tuesday when this thing was rolled out, because those pot stocks had already been in rally mode. And from my experience, when the music stops in this sector, meaning the momentum stops, the downside can be equally as swift as the rallies to the upside. So enough on that. Again, I will be monitoring this sector, as I always do, for the next objective long entry. And right now, I don't think it's there. I would use any bounces back if you're trapped in these names. And again, you have to, of course, look at the charts individually on each of these stocks. They're all different. When I look at when I'm clicking on to the right of the screen here, I have my watch list and I'm clicking on these names. They all have their unique charts with their own support and resistance levels, and so if you're trading those, you just have to trade them individually. But collectively, those are some of the levels on that new ETF. But again, it hasn't been around that long, so I don't want to put too much into MJX because it's just been trading now for a couple weeks. Next up is gold. This is gold futures, simple GC. And this is a 60-minute chart. I believe I've shared this one before. This is that most recent long entry, unofficial, but I made the case for a rally in gold here with this bullish falling wedge. Also looked at the daily charts. There was an extensive video on gold and the gold mining stocks a couple weeks back, and we've had a nice rally since. Now it's getting a little stretched. As you guys know, I like these divergent highs and lows for swing trading, especially on a 60-minute time frame. So you can see them all marked. This was a divergent low. You get a rally. You have a divergent high that tells you, okay, next trend is probably down. There it is, divergent low. Again, you look down, divergence meaning the indicators are making higher lows. Higher lows for positive divergence with prices making lower lows, and vice versa for divergent highs. So there they are. You can see the swing trading ops there. That last one was pretty powerful. We had a good run out of it. I don't have really any clean divergence. So you can certainly draw some lines here. Maybe that was a divergent high because you have about equal highs on the RSI down here and a slightly lower high on the MACD. And that's given me pause. Is this a bull flag? Somebody asked in the trading room today, right here. Let's zoom in a little bit. Possibly because you have a pretty impulsive move up, but I don't think so. Not looking at the charts. In fact, let's go out to a daily chart. This is again a 60-minute chart. We look at a daily period chart on gold, and here's the story. Gold is in this trading range. We've been in this sideways trading range for quite a while. Right here. That's probably not the right tool. Let's try to use a shading box here if we can do that. So there it is. You can see it's not super well defined, but we're not to the top of that range yet. I'd like to see us consolidate a little bit, and it'd be nice to have a clear level. Maybe we could add a trend line here, somewhere like that. This is where we need to. This is what gold needs to do, is break above that level. And right now there's some room to go, but again, it's a lot of noise. This is just another rally so far within a range. Now, I have made and maintained the longer term bullish case for gold. If you go back, watch the videos, click on the drop down ticker box GLD or $ GOLD. A lot of that has to do with my outlook for the US dollar, the euro, and of course gold itself. So I do think the longer term case for longer term outlook for gold is bullish, but right now it's a lot of noise within this range. So the best we can look to do at this point, of course, if you're a longer term investor, you can be long in gold and have a stop, your appropriate stops below, depending on wherever your entry level is and what your risk tolerance is. But this has been and probably will continue to be, particularly for swing traders, the opportunities try to game these rips and dips. And right now, we milked a lot of that run. I can't make a compelling case to go long here. If you're already long, you want to trail stops up, great. This move could continue to run a lot more than most people think. But at this point in time, I would not be chasing gold. In fact, I'm more interested in gaming the next short op here on the miners. I'll get to that. Let's take a look at the miners. Before we get to GDX, let's just look at gold real quick. This is a 15-minute chart. You can see there's that same bullish falling wedge we looked at on the 60-minute chart. I put lines at the gaps. Keep in mind that gold trades, gold futures and gold really around the world trades virtually around the clock. So when you look at GLD and you're looking at a stock chart, that's going to show you the regular U.S. trading hours, 9:30 a.m. Eastern up to 4 p.m. Eastern. So therefore, you're going to have these gaps because the futures continue to trade overnight. But they do tend to work because gold has a tremendous amount of money. Even big hedge funds, mutual funds, they'll invest in this ETF. That's how well accepted and widely held it is. Therefore, I believe at times it's a case of the tail wagging the dog. In other words, technicals on GLD can actually influence where gold prices go. So you can trade off these levels. This was an uptrend line. It broke yesterday, an impulsive breakdown, but a surprising snapback rally. Well, we call it resist or support right here at that previous reaction high, but I wanted to show you here's some levels, and we do have, you can see the negative divergence. Some back T starting to roll over right now. We have negative divergence on the RSI, that this 2868, that's an EMA pair trend indicator. So I am expecting a pullback in gold in the near term here. And yesterday I shared this chart with you, GDX 60-minute chart. Um, there's that negative divergence. We had a divergent high right here, just as we had a divergent low, which is bullish right here. You can see the bullish falling wedge, breakout, and a nice rally there. So that's, again, what I like to sniff out as a swing trader, these divergent highs and lows. And we did have a divergent high there. We broke down. There was a quick sell-off. I mentioned in the post yesterday, 2338 is an important level as well. We snapped down below it super fast, snapped right back up, and that's called a stick save. And remember, when you're trading, swing trading, or whatever trading, investing, you want to, I like candlestick charts. I feel strong on that. And I also feel strong on using um, a candlestick close commensurate with the time frame that you're trading. In other words, this is an hourly chart. So all that really matters is a 60-minute close. We broke down below that 2338 support, but we snapped back above it on a 60-minute basis. You can see the candle. In fact, we closed back above the trend line. We went on to break down shortly since, and you can see how these candles are working. We came back, tested that level again. That helps to validate it. This was a little, I don't want to call it a mini crash. It was just a swift swoon down in gold. A lot of stops were cleared or hit or whatever happened. We snapped back up. But you can see 2338 continues to act as support. That's that level I highlighted yesterday. And you can see two tags of it. We back tested that price channel from below, and we seem to be rolling over now. Indicators are rolling over. So this is GDX. I think we're going lower. When we print a 60-minute close below 2338, that will further strengthen the near-term bearish case. And again, this is for swing traders. If you're a long-term investor and you got into these mining stocks a couple weeks ago, or before then, great. You can set a lower stop, not be overly concerned with these 60-minute charts. But if you're an active trader and you're trading GDX or Nugget or Dust, these are the targets. I think we'll come down here. I think we'll have a reaction somewhere in this area, about 23 to 2312, possibly come back test that 2338 level, and we could move lower. There's quite a bit of supply right here, a lot of trading. There's that sideways trading range, but I think ultimately we can work our way back down here and be able to buy back into these gold miners cheaper, or swing a short trade down to that level. And again, that's all priced into the charts. Long side trades, I'm still cautiously bullish on the natural gas stocks. We've had that really nice run in nat gas in the last few weeks, and a couple weeks ago I went over this watch list I put together of natural gas stocks and some MLPs, master limited partnerships. So this is NGG. I still like this one. You have this downtrend line here. We've had a couple attempts to get above it. What I'll do now is adjust that trend line to capture these most recent reactions, because we haven't yet had an impulsive breakout. But you can see the divergence setting up there, and that's one of the few utilities I'm more bullish on. There were a few that I identified as short trading ops, and those broke down, and they actually hit support and had hit my targets and bounced so far, at least some near-term targets. Like this one, for example, you had this level here, flagging action right there. You can see that bear flag type action. Now we've broken below support, so this one's probably headed down here. But excuse me. As you go through down the lines, a lot of these, this would have been a long trade, and it took out this resistance level here. We had a little breakdown there, but it took out those previous highs. And so these, again, are long side trade ideas, and a lot of these pay nice dividends. Here's Cheniere Energy, LNG. Look at that. You could reaction, triple top, boom, finally broke out. Southwest Energy, I like this one. We had a downtrend line here, taken out, back tested, and that back test also went a little bit below the downtrend line, but it coincided with this support line right here, right around 505. And so far that's held. And this one, bigger picture, this one appears to be basing. You can see this basing pattern right here. So if and when we break above there, um, quite a bit of potential upside. And again, you watch the charts of oil and gas, and that will help guide us as to when to get into this one. But I think even if you're patient, you want to just buy this one. If you can buy it down here around $5 with a stop below, buy it a little bit above five with a stop a little bit below. Nice dividend yield about 6.68%. So you're getting paid to wait. So if you're looking for growth and income ideas, that's the sector I really like. Here's Apache. I mentioned this one the other day in the trading room breaking out. Now it's hit my first target, which was 46. Probably pull back here soon and eventually work our way up to these targets. So if you were in this one, you got the quick pop, you can take profits. If it pulls back, look for a back test of this trend line as your next objective entry. And if it continues to power higher, look for a solid and convincing break, and especially a daily close above 46. All right, I don't want to go over these too much in detail. I do like this one, Northwest Natural Gas, NWN. This one I mentioned is a bearish setup, along with a lot of the nat gas utility companies, and I showed it to you in this bearish rising wedge. Broke down, impulsive move. There's your flagging action right there, which is a couple days of consolidation, followed by the rest of that bear flag playing out, and then some a little bit. So this one looks interesting here around 57, 51, right around where it is now. Actually, you don't want to try to capture every little penny. That's a very solid support level, and you can see here on the 60-minute chart. I like to see this as well. My favorite setups are stocks falling down to support on the daily time frame. If the charts confirm that that support level is likely to hold, which I think it will on NWN, and then further confirm the entry or hone down your entry, if you will, by using the intraday charts, which we're doing here on the 60-minute time frame. I don't have a well-defined downtrend line, at least not coming in at this point. We can use this downtrend here. So this may develop into a larger wedge. We could have another thrust down as long as these divergences remain intact. You see, in other words, what I'm visualizing here is this one could hold here. You can step in now, but it may want to do something along these lines before it goes on to break out, and that would look something like this. As long as those divergences remain intact, um, there's a potential bottoming play on NWN. And again, that's one of many, so you can revisit that video, although I'll probably have to do a separate update on this one soon. All right, anything else? Commodities still look to be, they're not taking off. I'll go through a few of the particularly the ag commodities that I'm looking at now. There's soybeans. There's a grain ETF. You can see the divergent low. You have confirmed divergence on the daily time frame. Um, there's wheat, just broke out above a downtrend line after a divergent low. Looks to be headed up here at about 639 or so, at least. And again, I'm looking at potential bottoms in these long-term bottoms, and that has to do with going back on. These are only 2-year charts we're looking at, but when I go back longer term, a lot of these commodities are at their historic lows. And unlike a stock, which can go to zero, if a company isn't well run, the ultimate downside for any company is zero. Any company can declare bankruptcy. You're not going to get that with commodities. There's always a value in corn and wheat and soybeans and things like that. And so, if you buy these down towards the historic end of their range, or at least at support levels, your downside's limited. So they're not paying you to wait. You don't get a dividend off a commodity. But if you're looking for a way to either hedge your portfolio or growth opportunity with this stock market well beyond the average run of a bull market. Valuations very high. This I think is somewhere to look for 2016 in the commodities arena. DBA, there's the agricultural fund ETF. So this has a little more diversity. You're not just playing one commodity, you have several, and it's done well. I pointed out this divergent low oversold recently, and so far this one's rallied, and that's right up to where I had a first target there. So that's about a 4.5% rally. Again, nothing explosive, especially if you've been trading the cannabis stocks or the gold mining stocks lately. But if we can get through there, my next target there is about 1953. And again, we're looking at this as a longer term, a potential bottoming play here. There's coffee, same story, divergent low. Well, that's actually copper. I'm trying to cover the ag commodities here. There's sugar, and again, looks like it's just basing here. It hasn't yet taken off, but if it can break out above this basing pattern, I think it looks good. And finally, a couple more. I think I have Just one more. Cocoa, which is symbol NIB. This has been a trade on and off. You can see the price targets. Last time we hit the second target there, and then it reversed. So that was a good time to get out. That's why final targets exist. That's usually where I think either the trend will change or at the very least the risk reward to being long is no longer attractive. So congrats to those that caught it, got out right at the highs. And this one's come full circle. So story is the same. This one's basing. A lot of these commodities are basing. This is a basing pattern here. You can step in and buy towards the bottom of this pattern, that orange line, swing it up to the top. But ultimately, you don't see things base sideways forever. It'll most likely break out. And based on the charts, I expect the breakout to be to the upside, not the downside. Anything's possible. One of my favorite setups, and we saw this in gold back in early 2016, is when you have a well-defined support level to see a flush out move, a quick move down through there. That's a bear trap, sucks in some shorts, shakes out a last week-handed long. So if we get that, and I could see it here in the charts too, maybe we come in and set up some bullish divergence. That would be very bullish and set the stage for a nice rally or long-term hold. And what I'm referring to there, we don't have divergence at this point, but let's say we do move down like that. This would look something like this. We'd come in, put in a higher low in the PPO, higher low in the RSI versus prices making lower lows, and there you'd have positive divergence on the daily time frame. And once, if and when that happens, and you snap back above that level right here, that orange line, what happens is all the shorts scramble to cover longs that were sitting on the sidelines now jump back in. That's saying, well, that's a very bullish technical event. Coco broke support, but then went back in and regain that level. And keep in mind, as always, I like to confirm these are the ETNs. They do a pretty good job of tracking. Some ETNs don't do a good job, especially natural gas, things like that. But in the commodities, the ag commodities, they do a pretty good job. But with that being said, I like to confirm my entries or what I see on the charts of these ETNs with futures, the futures contracts. All right, let's yeah, long video. Let's wrap it up there. I wanted to share my thoughts on the broad market, but I don't want this video to run any longer. I'll cover that in a separate video. So there it is. There's some ideas. Some are actionable right now. Some might need a little more work, but hopefully that helps you guys out. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.